That as the JSE All Share Index traded almost 1% lower, reversing yesterday's gains, with investors monitoring economic data and more corporate updates. Petri Redelinghuys is the trader and founder of Herenya Capital Advisors. He joins us now for the latest market wrap. Petri, thank you very much for your time this afternoon. Perhaps to start with an overview of how the markets are faring so far today. It was a sea of red at last check.
Good afternoon. Thanks for having me. And yeah, it's bouncing back a little bit. I mean, the top 40 index is still down around 1/3%. So it's fighting back, or at least trying, but still not exactly having the greatest of days. I think that it's been a relatively rough time for markets over the last while. We've got really bad economic data coming out from all over the world, signs of slowing economies, cropping up all over the place. And this is putting a bit of strain on emerging markets, right? I mean, if we even look at the rand, for example, that's 0.8% weaker versus the dollar, trading currently at 18.61. So we've had a period, or the beginning of this month at least, of really sort of strong gains on the rand, which is now starting to be reversed over the last couple of days. And we can see that the All Share Index is following its, fortunes, as there's quite a bit of weakening happening. Although I must say that it has bounced back somewhat since early trade. The US session is expected to open obviously a little bit later today. We just did see some big results coming out from some of the tech companies there, and it's not looking that great, to be honest with you. So our anticipation is that markets will probably remain weak for, there's only 2 days left of this week, right? So running into the weekend, we're expecting markets to remain on the soft side.
Okay. Let's take a look at mining production and sales data from Stats SA. That is out. Should we expect much of the same when manufacturing comes out?
I mean, probably. Just unpacking those mining sort of production numbers, both gold mining and general mining, so other precious metals. Diamonds was down massively. I think it's 28 to 29% lower, which is where most of the pain comes from. Manganese, most of the minerals essentially that we mine from South Africa, mining production is lower. Now, some of the reasons cited for that is, the most obvious one being the inconsistent electricity supply being an issue, but also crumbling, infrastructure. So deteriorating road infrastructure, deteriorating rail infrastructure, and deteriorating port infrastructure prevents us from being able to export much of that which we produce. So that has been obviously, those are some of the contributing factors into why mining production is lower. But we do know that that has a ripple effect on the rest of the economy, right? Mining is obviously our biggest industry and a large contribution to tax. And we, for a very long time, have been one of those mining economies, if you will. So I think as mining goes, so goes the rest, right? Manufacturing production, I don't think can be much better. We've had a year with record amounts of load shedding. Look, last month I think was the first month of the year that we had less load shedding than the year before for the same period, right? So maybe that's a glimmer of hope. I don't know. It doesn't bring me much hope. I think that we've had massive amounts of load shedding in all levels of as to look around our economy, things are not getting easier out there. So I wouldn't hold my breath in anticipation for improved numbers. I think we probably see further contraction, like we've seen with mining production, right? I mean, this is the third month in a row, essentially, third quarter in a row, that we've had a decline in production. So I don't see that trend is any different in any other sector, to be honest.
Let's take a look at SAPI's profit. It plunged at 51.7%. What led to the declines?
Look, so actually SAPI beats on basically every metric except for operating profit, right? Operating profit was a bit lower, but everything else beat. And I think what the market is most excited about, the share is up very, very strongly. I think it's up something like 7% at the moment. Let me just quickly have a look here. So one of the reasons it's doing really well is firstly there's upside surprise, if you will, on the dividend. So yeah, SAPI up 6.94%, so call it 7%. So the market really enjoying the results, even though the headline number looks bad, profit is down, everything else is good. And I think one of the things that is the most encouraging is that the debt, SAPI's debt has been reduced. So management set a target of having debt of around $1 billion, which is an enormous amount of money. It was around 1.168, somewhere around there. That's been reduced now to, I think, around 1.06. So it's about a $80 million improvement around, reduction in debt. So even though they run an operating loss of, say, $40 million, that debt reduction is double that, and they've increased the dividend that they're going to be paying out. So I think the market is really surprised at the fact that the dividend is as good as it is, and that every other metric is doing relatively well except for operating profit. So, revenue, all the rest kind of beat expectations. So, yes, that operating profit number takes a punch, but that's partly because they're, paying off debts, which is in line with what management promised, and the market is enjoying that. So the share price is doing really well today.
What about Sony? Their operating profit fell 29% in the July-September quarter. What's going on?
So also a bit of a mixed bag and things to look at. If you look at revenue, if I give you the yen numbers, 2.8 trillion yen, right, which is $18.5 billion US dollars, which is still a significant amount of money, which missed expectations. The expectation was for 2.87 trillion yen, and it came in at 2.8, so small miss, but it still represents an 8% increase in revenue year over year. So very good. Operating profit, however, down 29%. So that's pretty big, right? A large part of that is they have what they call imaging sensor business. So basically, this is chip manufacturing for cameras, right? And imaging sensors. So they are a supplier of Apple, for example. So your Apple iPhone has Sony parts in it that runs the camera and the chipsets and the imaging sensors for that, right? So there's weak demand in that space, and they've really been struggling in that section of the business, which is the biggest contributor to their decline in profits, if you will. So that is one issue. However, they do say that they are on track to sell 25 million units of PlayStation 5 gaming consoles, which is massive, right? So they also had they released a new game, Spider-Man 2 or whatever it was, that sold something like 2.5 million copies in the first 24 hours, which sets a record for most games copies sold in a short period of time, right? So there are sections of the business that are really doing very well. However, a large portion of their profitability comes from that imaging sensor business, chip manufacturing, which hasn't done very well. So if we look at the share price reaction there, I mean, it's not open in the US just yet. US markets will open a little bit later, but in the pre-market, it is looking to be down quite a bit. I mean, it's down around $2, so it's down in excess of 3% at this stage in the pre-market. So the market really not enjoying that result, even though there are, signs of good in there. It really comes down to that profitability measure, which the market was quite disappointed by.
You're not a gamer, Petri?
I don't play PlayStation games. I play real games on computers.
Okay. Thank you very much for your time.
I think I just caused a war there. Some viewers are going to be real.
You did, probably. Somebody's raising an eyebrow at you. Petri Redelinghuys, trader and founder of Herenya Capital Advisors. Thank you very much for your time.